A warm welcome to the tradingmentors.com. Hope you're having a wonderful day. And in this video, I'm going to show you how you can turn $1,000 into $10,000 using gold. I've been trading for over 30 years, and this is one of the best systems that I've used, using leverage, using compounding, two of the great ways to make a lot of money very, very quickly. And I'm going to show you the trading methods we use. So I'll give you a full understanding of the 1, 2, 3 system. The 1, 2, 3 system is a system which works throughout any market on any time frame, whether it's daily, the 1 hour, the 4 hour, whatever you choose. In this instance, we're going to talk about the 5-minute chart on gold. And we're also talking about leverage. 1 to 500 leverage is high leverage, so this is aggressive trading. This is not suitable to get funded. This is all about having small amounts of money and turn them into very big amounts of money relatively quickly. I'm going to show you the price action tools we use, the outside bars, reversals, the continuation patterns we use, and compounding, which is the key. I'm going to give you the rules on the compounding, the 8th wonder of the world. In addition to that, I'll explain where the targets are, how to calculate stop losses, and so you become a better trader. Now, ordinarily at the Trading Mentors, we offer a Get Funded program which consists of the price action charts, including the gold on steroids software, 12-month support, 12-month signals, 12 months VIP membership, the full works. But you can, of course, come and meet me live at my home, and then we'll go through it. You get 2 years of information, signals, and support. High net worth clients, usually. VIP package with full coaching and charts. And then we've got the Get Funded program, $495, where you get all the support that you need for a year if you're just starting out in your journey. So the Get Funded Today program is the one that includes the gold on steroids software, okay, which I'm going to go through now. And of course, you can go for the signals, you can go for the VIP membership. It's your choice at the end of the day. So let's go into the charts, and I'll explain a little bit more and talk about compounding once we get the system up and going. Now, if you have the Get Funded, you're on the Get Funded program, then of course you'll understand what these settings are. If you're not sure of these settings, then just contact me and we'll get you going. The important thing to understand before you start trading, of course, is where the trend is. And then we'll talk about the 1, 2, 3 system. So this is a very simple system, which is red and green for buys and red for sells. Very straightforward, easy to understand, even beginners can do it. So once we see green, then we are looking to buy into the market, and everything is green. So we can say that at 5:25 in the morning GMT, if you're up that early, you can say that you're only looking for buys. Okay, at 6:30 if you wake up, you're only looking for buys. At 7 o'clock, you're only looking for buys. Okay, so therefore you're only looking for buys. And by the way, we're not looking for massive pips here. We're not counting pips like many of you do. We're actually increasing the money by using compounding and high leverage. So unlike the Get Funded program, where we recommend 2 or 3% risk with a $10,000 account, demo or real, or Get Funded $100,000, you'd risk 2%, for instance. We're talking about a very small account, $1,000 as an example, and doubling it every few weeks. In actual fact, if you get it right, you can double it every 4 or 5 trades. So let's get into it a little bit more. First of all, understand what a 1, 2, 3 is. The first one, as the number suggests, is a change of character. So that is your 1. Number 2 is the swing low. So that is 1. Change of character, i.e. it's gone from sell to buy. And the number 2 is the swing low on the stochastic. Everything you're seeing now has special settings. It's not standard settings. So please don't try and guess this, because it won't work. This has been tried over and over again over many, many years. The number 3 is the move. So you're going to buy there or you're going to buy there. 2 bites of the cherry. and it only works twice. Only works twice. You're not going to go 3 times in one session. It just won't work. It will fail completely. So allow me to explain. In order for the buy, we have to see a pullback. So once you've got the 1, that's your alert to say, look out, the price is going to swing low, and at this point you're just simply going to buy it. So there's your buy. There. Your stop loss, guess what, is the green line. Now, in the compounding formula I'm going to give you in the next few minutes, it's based upon a 30 pip stop and a 50 pip target. That's all you need. Don't be greedy. If you want to expect it to move 100 pips, and sometimes it will, then of course you'll be waiting a long time, maybe 2 or 3 hours for it to hit. With a 50 pip stop, it can be simply a few minutes. And that's it. End of the day. So let's go into it. We've got a long position here on that buy signal. We've got a stop here of 34 pips, and we have a target of 50, somewhere around there. That's it. Now, if you get another signal here before your target is hit, here, then that's subjective. It is a choice you can make to say, right, okay, I have faith in this. I'm going to put another position here. So you've got one position here and one position there, both with the same target, both with the same stop, let's say. But don't forget, that's aggressive. What I would do personally, I wouldn't bother with the second one. I would say that this is the position and you're going to make 50 pips on this position here. You're risking 34 pips. So what you're looking for is at least 1.5 risk to reward. Sometimes if you miss this one, you miss that one, fine. You want to get into the next one. So you're going to go long here. Your stop is 27 pips, let's say there. Your target is 50 pips. Then of course, then you have that hit fairly, very quickly within about half an hour. So that's the buy scenario. So the 1, 2, 3 is very straightforward. Wait for the change of character, then wait for the 1, 2, 3. Now here is an example. You have what we call consolidation. So we have a green buy followed by a sell. So that is consolidation, and the market is doing nothing whatsoever. You need to wait for the price to break down or break up. Doesn't matter which way, but your trade isn't here. Can be there if you wish with a breaker structure, but for me it's the 1, 2, 3. So the 1 is back here, change of character. Your 2 is here or here, but look at the color of that there. It's just gone red there, so that could be quite valid actually, depending on what time you're looking at the chart. So here, let's do this one. Here is not ready because this is green. What can happen there is it can just go boom like that and trip you out. The key to here is to make sure that everything agrees. And so if that does, at this point here, then you have a stop here of just above that, 28 pips, and a target of 50. Okay, so that one would have been hit somewhere around here, end of trade. Now if you miss that one, there's another one here. You can see that quite clearly. And you're going to have a stop maybe a bit wider this time, 32 pips with a 50 pip stop target, and away it goes. The key to this is that you are going to be adding to positions, 2 positions within one session, potentially. At the maximum, you might only get 1. Okay, you might only get 1 by the cherry. But if you've spotted that there's 2 positions that you could have had, don't go for the 3. The 3 simply won't work. So it's only on fresh signals does it work, and happens twice. So in this instance here, you can see straight away we have change of character here. The price has changed character and gone green. So that's your 1, change of character. And then you can see the swing low, which is your number 2, and 3 is your buy. So very good examples here of those positions when they work. Now, sometimes you might only get one position. Here, let's say, now your stop is below the swing low, 27 pips, and target 50. Of course, you can aim high if you want to, but 1.5 to 2 times risk is plenty. You can go for 60 pips if you wish, but sometimes it won't get hit, so just be aware of that. What you're looking for is a consistent method of trading a chart at your leisure that you can set and go. You don't want to be staring at the chart all day. You're looking for a 1, you're waiting for the number 2, and then you set your stop, you set your target, then you disappear. Don't look at the charts any longer, you don't need to. And as I say, usually during one session, the London Open is good because there's no news during the London session that's going to drive gold, usually the other way. During the New York session, it's a fresh set of charts, and so therefore you have to wait for the news to be completed and then wait for it to settle down. So for instance, you've got interest rate decision, you've got inflation data, high impact information which could impact the price. So just be aware of that. Once the information is out, wait for it to settle for 20 minutes and then start to make decisions, because otherwise you're just going to get tripped out for no reason. The key to this is, well, there's several keys. Compounding is the 1, 2, 3, waiting for the change of character, and then waiting for the swing low. You can, of course, simply buy it on the change of character when everything goes green. That's an option. Stop below here, 2 times risk. You can wait for the change of character, everything to go red, then sell. Okay, that is an option for you. Before I go into the compounding rules, the lot sizes, so that you can get the good aspect of this and see whether it suits you. This is aggressive, and so therefore by its very nature will make a lot of money, or you're going to get stopped out, you're going to get fed up, and you're not going to like it. So understanding the rules is really important in terms of waiting for the perfect position to set up, i.e. the swing low, swing high. The other thing to look out for is outside bars. I often talk about this within the mentorship, with the members section, and the outside bars are really, really important because they are potential reversal points or their continuation patterns throughout. And we've seen this so many times over the years that it's highly, highly profitable. So I'm going to go into that detail now. So we were talking previously about a continuation pattern. We're talking about a trend. We're talking about everything green on the 5-minute chart. So you're looking for a swing low, or when it's red, you're looking for a swing high to get into the position where you can bank your 50 pips over and over again. So what you do in terms of when you see an outside bar is where the price has come outside the channel and is likely to continue. If you see an outside bar outside the channel on a supply area like this, there's likely to be a big move. If you see an outside bar like this or like this, there's likely to be a big move. When I'm talking big move, I'm talking about 200 or 300 pips potentially. So what do we do when we see an outside bar? So I'm going to go into the detail now. This is a slightly different aspect and a slightly different method, but again, with the coaching, you'll get used to it. Now this method is a much more simple method than the previous one. You haven't got to wait for any swing lows or any swing highs within a trend. But what you are looking for is a change of character on the lower time frame, the 5-minute chart. So as I pull my cursor to and fro, you can see how it's lining up with the left one, which is a 15-minute chart, a 30-minute chart on the left. That's 15-minute chart. We can go to the 30-minute chart, doesn't matter. 30-minute chart, which is an outside bar. We talk about those. Let's go to the 15-minute, that's a little bit clearer. So we see an outside bar on demand, this is really, really important, or an outside bar on supply, that's powerful, and also a double bottom here as well. So that's strong indication the price is going to reverse. Now we had a pending order already based upon high probability the price is going to go higher anyway. But whenever you're trading this, this is again a special setting, and as you can see the red line is still red. It doesn't go green until you see a change of character. Once you've seen the change of character, so if we had an outside bar on the left now, you'd be selling that. Excuse me. And if you see an outside bar on the left and you see this go green, you're going to buy it. And we've already worked out our target as one at 24.94. So that's a really simple way of getting into a position on an outside bar so that you can get into that position on any reversal. Now what I'm going to do now is enter into the world of compounding. So what is your lot size, for instance, on $1,000 account, new account? So let's do some maths. So this is the compounding formula. Now, my son-in-law, he's not a trader by any means, but he's been picking up on it for the last 12 months or so. He put in £2,000 and he turned it into £15,000 within 3 weeks using this method, and it works a treat. So if you're starting off with a small amount, then you can use these lot sizes, and this is the lot size he used. Aggressive, yes, but nonetheless, unless you've got to be aggressive to make the money on the lower amounts of money. So this is all about turning $1,000 into $10,000, and you're going to start with $1,000 here, and your initial lot size is going to be 0.5 or $5 per pip. Your target is 50 pips here, and your target typically is 30 pips. It might be less. Very rarely is it any much more than that. And your leverage on your broker account is 1 to 500. High leverage. And we're using a compound of delta 10. You can use delta 5, which is more aggressive. But what that means is that for every profit you make, you're going to bank $250. So the $1,000 turns into $1,250. $1,500 and so on up to $2,000. You're not going to increase your lot size until you double your account to $2,000. Okay, so very quickly within 4 or 5 trades, you're actually going to double your account if you get it right, and that's where the practice comes in. So once you get to $2,000, you're going to double your lot size to 1 lot. So you're $10 per pip, 50 pips equals $500 times 2. Usually there's 2 times, so you can make $1,000. You're not going to increase your lot size until you double your trading account to $4,000. Once you get to that, you're going to go $2. Whoops. Zooming in there. You're not going to go to $2 until you reach $4,000. Now, if you have a loss, and let's say you get to 2,000, you've increased it to 1 lot, then you have a loss and it brings it back down to 1,900 or whatever, you must immediately reduce your lot size on the next trade to 0.5 immediately and instantly, because otherwise you're compounding the other way. So just be aware of that. So $20 per pip, $40 a pip. But here's the key. Once you get to this area here very quickly, within 4 or 5 trades, you're actually using the market's money. You're not actually risking anything. And once you get to here, of course, and these, it's a different ballgame. Now you might feel, hold on a second, I'm going 8 lots. That seems too much, but you're risking free money, 0 risk. You've got a 0 risk game at this stage. Now, of course, once you get to $100,000 or whatever, you're going to take some money out. You're going to buy some shares maybe, or a new car, whatever it is you want to do. That's up to you. But the key to this is consistency. You must follow the rules precisely. You must follow the trading rules precisely. Do not trade during consolidation. You must wait for the trend to establish itself, and then you must wait for the swing high or swing low if the markets are trending. So a fantastic way to make a lot of money quickly using a 30 pip stop and a 50 pip target in gold. If you have any questions or you want to get started with the Get Funded program 495, then please contact me and we'll get you going and start making some money immediately.